Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Tuesday, October 4th. It is 7:10 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin up 2%. Equities up between 1.6 and 2%. Oil's up 0.5%. And we've got that OPEC plus meeting in Vienna tomorrow, where it's expected they make a cut to their production. It remains to be seen, how much, etc., all the details, but that is widely expected. Oil had a really good day yesterday and up a little bit again this morning, so we'll have to follow that. Following up this morning, a lot of green on the board after yesterday's nice rally. Nothing much else on the macro or earnings front. We're kind of in a lull here. So let's dive right into the charts. US dollar just consolidating here. Little pullback from the high 114s down into the 111 range. I've got support at 111. You see the 20 EMA coming in there. Should act as some support. Plus you've got the lateral support here with this other price action. So I think the next level to really watch on the dollar is 111. And should that break, then you've got an uptrend line coming in somewhere between 109 and 110. But anyhow, holding above support at this point. Really interesting on the bond front. I sent you this chart yesterday, which shows the 10-year bond yields. And we had a low back here in August of 2.6%. And we've been on a steady climb, topping out right at 4% just the other day, and now we've pulled back. And what I've done is drawn a trend line there, and you can see the trend line break, which could prove really significant because the equity markets have been real sensitive to these bond yields that have been doing a moonshot, and any kind of moderation in that or break in that trend would really be helpful for the equity markets. And so what I've done is drop in the Fibonacci retracement tool, and the 38% retracement zone comes right into play at this 3.5%, which was the prior high. So that's going to be really the first area of big interest if this thing moves down, and that would be a place that I would certainly have highlighted on your charts. The reason being, if it's a simple fib retracement, holds at the prior high, and then bounces, goes higher, recaptures this trend line, etc., then the bond market will be in for more pain. But should this crack, then you're looking at 3.3% and then 3.1%, where you can see there was we had a prior high back here that held as support here, resistance. So this whole zone would become support down at 3.1%. But like I say, if bond yields drop that far, we would, I would think, most certainly have a real nice equity rally underway by that point. Also note up here a high level bear cross on PPO, and you can see up here we had one of those, resulted in a pullback of the yields, and we also had a bear cross here which resulted in this pullback. And you could also see up here on RSI, we have become overbought. You could easily put a trend line here and see that that trend line has now been broken to the downside. So I think it's going to remain important to watch those bond yields like a hawk. VIX was down yesterday, but still closed above 30. If this rally holds today or is built upon, and we drop down below this 29 and break below this uptrend channel, then that would bode really, really well for equities, of course, having, VIX breaking out, then not being able to hold this support zone. And then, technically speaking, the door would still be open for a move back up towards these prior highs around 36, 37. So going back to our game plan, as it were, if you're actively trading, do two things. One, keep your 5-minute VIX and your 5-minute TLT on your matrix, on your active trading matrix. And if you can pick up on a daily trend of the VIX falling and TLT rising, that's going to be very supportive of a continued equity rally. And the time, of course, to be concerned is when you see those divergences, namely, the VIX starts rising and equities are rising at the same time. That's usually not something you see, so that would be certainly a warning flag for you on your active intraday trading. Moving on to Bitcoin, we've been focused on this 19,000. Got a lift yesterday. It's lifting here this morning. We're right here at the 50 EMA at 20,313. So a break above the 50 would open up the door towards 21,500 on your Bitcoin chart. We talked about oil having a good day, up 5%, closed above the daily downtrend channel that we've got marked in, recovered this 8-day moving average. So now above resistance, I've got a pivot point at 85. And then, of course, you've got the 50 coming in here right around 89. And then you've got the 200 up in the 92 range. So still work to do, but all in all, positive, I'll say emerging price action in oil from the standpoint, very well-defined downtrend channel, and now emerging out above it. And as long as it can hold this breakout, then that bodes well for at least a bounce into the 50 or even the 200, where you've got some resistance here at 92.50, and then possibly even up to lateral resistance here at 95. And I would imagine a lot of that will have to do with how price reacts tomorrow after that OPEC news comes out. If you're in that EWG short, I would just close that. The reason being that we had the big down move. We rolled down last week. Put in what could be called a little hammer candle, and now we had green this morning, going to be green today. Just close it out. What we may see, if this equity rally is short-lived, that classic move that we've seen so many times, a breakdown, a back test of 2150 that fails at resistance. So we'll see where this bounce leads, whether it's up to 2150 or even the downtrend line at 22. You have to still lean on the short side longer term, because we've got a well-defined downtrend on the weekly, which of course holds a lot more weight than a daily chart. So until Germany can break out above the weekly downtrend line, I think you still have to be looking on the downside. Big bounce in NYMO yesterday, brought us up into 18. If the rally holds today, we're going to move up, into the upper half of the range, and then we'll see how high we can go if the rally can extend. And then, of course, we'll be looking for overbought conditions in the days and possibly weeks ahead if the rally can sustain itself. Same kind of comments on NAMO here at 13. If we get a nice rally today, we'll be up in the upper half of the range. Not particularly predictive at that point, but as we've discussed many times, that once you move into the upper half, then chances improve that you can go up to the overbought level, and then you got to be concerned that the rubber band is stretched in the other direction. And you can see, generally speaking, overbought, oversold, overbought, oversold. We didn't make it up last time. A short-lived rally came back to extreme overbought and then a bounce. Moving on to the SPY daily chart, we had undercut this prior low Friday, and then we recovered that. Notice that we're up against the 8-day moving average. I think you can still use this 362.50 as your pivot point. Stay long against that. If we can clear 370, then then we can make a run towards this downtrend line that comes in around 377. We'll get a cleaner look here on the hourly chart. There was a little gap to fill that hasn't quite been achieved yet. And then you can see right at 370, that would represent both a gap fill and get on the upper half of the downtrend channel. And so remember, the midpoint of a downtrend channel can and often does act as resistance. You see it here, bottom half of the channel. Once it got below, it came up, found resistance, came up again, spent some time there, then actually went up, gave us a fake breakout, then stayed on the upper half, and now we've been on the lower half. So making a long story short, if you could get above 370, fill that gap, get on the other side of the downtrend of the midpoint, then there's a real good chance that we could make a move up towards 380 at the top of the channel, and that would be a nice little move to capture on if this rally can proceed. Now, we do have some lows right here where it hesitated in this kind of bear flag kind of look. So there'll be a little resistance there at 373, but I don't think that's going to pose a big problem. And if you look at it, if you follow my cursor, if we box this area in here, you basically got a $10 trading range between 373 and 362.50. Let's call it a $10 range. So if you can get a breakout above 370, that lines up really well with a $10 measured move up to 380. So we do have some things lining up there as far as where price could go on a breakout above 370. Moving on to the Qs. Still below the 8 EMA, just showing how weak the price action has been. Got a little gap to fill, and you see where the downtrend line comes in. I still think you can stay long against this prior low down at 270, and then if you got long yesterday and you're still long, I would roll up if you can get up to, fill that gap and get up to 280. We'll see. We'll get the detail here. There's that gap. There's 280, and there's the upper trend line channel. So I think it's going to be really important to extend this rally. There'll be a big decision point at 280, and I think a breakout above 280 could see, whether you want to call it a short squeeze or a continuation of the rally. It's always significant when you can break out of a downtrend channel, and then that would open the door towards 285 and 290, where you've got the first real big high volume over price bar and some more significant resistance up to 290. So job one is fill in the gap up to 280. Second objective is to break out above 280 and then head towards 285. IWM cleared the 8 EMA. You see the downtrend line. I think today it's pretty clear that a breakout above 170 would be significant. That would open the door towards 175 and 177.50. You can see what we basically had over the last week or more, 10 days, whatever. $6 wide consolidation. You break out above 170. That projects a move up towards 176. That lines up really well with this prior price action. So let's see if we can get the breakout above 170, clear the downtrend line, get the measured move up to 176, and then see if we can find 179 and then 180, 181, 182 in this band of resistance here. Moving on to Meta. These COVID lows held down at 136. We've got a little gap to fill up towards 141, 50-ish. Get on the other side of the midpoint of this channel, and then see if we can make a push up towards 145.50. And then if it can do that, then the path will open up significantly for a move back to 150 and possibly 155 up here. And then remember, let's see, I don't know, I didn't do any work on this, but yeah, see here, we broke this consolidation box, came down to the COVID low, and so from a bounce perspective, we just talked about it a minute ago, a breakdown back test of 155 would certainly be plausible, even likely at this point. Come back and revisit the scene of the crime, revisit the breakdown level, and then there would be a big decision point there. Why? Because you've got all this price action acting as resistance, and whenever you have a breakdown and a back test, what you want to do there is, if you've been long, cover your short, and then the objective trade is to get short again, figuring that all this price action will act as resistance and that will fail there. And then, you know what, if you get stopped out, if you take your short at 155 and then you get stopped out and price proves that it can break back into this trading range, then you'd get long and look for a move back up to the top of the box at 170 as it re-enters the trading range. Apple still weak price action. I mean, it was up 3% yesterday, but all things being equal, you can see how much work has to be done to get back up to the top of the box, which would be a really nice move. That's a $10 move. Just keep in mind, you've got a level here at 145.50. Now it looks like there's a void here, which there is, but if you go to the daily chart, you'll see some resistance there, and then you've got some big gaps to fill. So from a technical standpoint, it would be kind of elegant to break below the downtrend channel, recapture it, make a fast move up to 152, check mark of filling that gap, check mark of filling this gap, and then there would be a big decision point here at 152.50, whether it can break out of the downtrend channel line. So I think for today, you can stay long against 142.50. See if you can make 145.5, 146 at the midpoint, and then challenge these gaps either later today or tomorrow if the rally can extend. Tesla had a bad day at the office yesterday, 8.5%. We had penciled in this bear flag measured move. Well, it blew through that, came down here and found support at 242.50. So if it can hold that, you could see a $10 rally back up to this level. And I kind of want to show you where we're at on the daily on this. We had a $35 trading range, which of course there was the gap down. So that measured move is down here around 235. Right now we're at the high volume over price bar here, acting as support. So if that can hold, you could see a rally to come back, possibly fill this gap, and then come to back test this 265 area. And just like we talked about before, just from a technical standpoint, you'd expect it to fail there, right? Because you've got all this price action here acting as resistance. So, but today, if 242.50 can hold, then you've got the potential of a rally up into the high 250s, and then possibly even 265 here at the bottom of the prior trading range. Microsoft, don't have the pivot points moved for you, but you can see we've got what amounts to, if you follow my cursor, we've got resistance across the top, and then we carved out a trading range down to 235. So in essence, what we've got is a $7 trading range between 235 and 242. If we can get a breakout there, 7 onto 242 gives you 249. You'll have some resistance at 247.50. But what's significant about this is that we've already broken out above the downtrend line. And if we can just clear this 242 area, then I would imagine a move up to 247 would happen rather quickly up to this next level of resistance. You see it here, rejection, rejection, etc. 247 and then 252.50, excuse me. So this looks pretty promising here. Amazon, little gap to fill to get back up to the top of the $6 wide trading range. If you can get a break above 118 here this morning, then 6 onto 118 gives you 124. That lines up more or less with this old gap up here that got partially filled that runs up to 126. You will have, I would imagine, some resistance at 121 from this price action. But this morning, if you can catch something close to 118, I think that is a nice long. You've got the bullish falling wedge. We broke out, then came back to the bottom. And then yesterday, if you were on your toes, you saw that that low held. And if you got that entry or anything close to that, that was, of course, an excellent trade. You got, you got $4 out of it for sure. So this morning, if you're still long, what I would do is, if you get a break above 118, then you can do one of two things. Just move your stop up and watch it carefully the rest of the day. Hopefully, you'll get an extended move. Or if you wanted to go to the bank at 118 and buy some extra time or whatever, you'd be looking for 121 and then a gap fill up to 126 or so, right in that area, and then that'll be the sledding will get a lot tougher in that area, because you can see you've got a value area carved out here between 126 and let's call it 129.50, 130, something like that. Google still in the downtrend channel, but making progress. I think here with this $3 range, you simply want to get, if you're interested in trading Google, what you want to do is buy the breakout of 100. That would give you a measured move up to 103, but that will mean the most significant thing is we'll be breaking the downtrend channel. And if this rally extends, you can see that the volume over price profile kind of falls away here. And I would expect that if you got to 103, then you could get to 106, where the resistance really comes in. And then if all the stars align, you could get up to 111 to fill this gap. And then that would be a nice, technical kickback kind of move to, if it was going to fail, at least get this technical check mark. So there's definitely work to do, but I think the path becomes easier above 100 and certainly easier above 103 if it can make that. Netflix has gotten choppy here the last several days. Not that you can't make money. Here's a move from 234 to 240. That ain't all bad. And you can see that this little trading range here has held over the last week or so. If you can get a move above 240, I think you can be long there and look for 245 and then potentially get back up into this old gap where we saw prices before get up into the low 250s. And so I think these levels have really solidified over the last couple of weeks, where 234 you can see support, bunch of resistance back here. So this 234 becomes an important line to hold, and I think if you were to get a pullback, that 234 is a logical place to buy with a stop below. But here this morning, with things being green, I'm looking for a breakout above 240 and see if we can get to 245, 248 in the next days. Semiconductors are, they're still underperforming, but I think there's a good chance for a tactical long here. If you get above 195, you can see that we've carved out a $10 wide trading range. So you get above 195, get long, and you're looking for 205 for starters. And if that can be achieved, then of course you're above the downtrend line, and then that would open up a door to 208, and then you've got a more or less a $6 gap here that has yet to be filled, and then that would again be a really nice short-term tactical trade. ARK, I think, more or less underperformed yesterday. ARKF was up 247, so that was good. But you can see here, this trading range has held, and so now your technical target is the midpoint up towards 17, and then top of the box up towards 1875, 19, something like that. So if you got long against the bottom of the box, I would just stay long there. ARKG, still has work to do. Why? Because all we've done at this point is we lost the trading range. We got our measured move down here towards 3150, and now we've back tested the bottom of the range on multiple days. So really, really to get this going, you got to break back up into the trading range right here at 34.25, and then at that point, if you can get that breakout, then my target would be 36 and then 38 on ARKG if it can put in this bear trap, right? Break down, come back into the range. All these people would figure out that they were wrong, and then they would be covering above 34.25, and that should give a little extra horsepower to any up move that might be there. Same kind of idea with ARKK. Didn't really do much yesterday. Of course, it still holds a lot of Tesla, so it would have been hard yesterday for ARKK to do anything. The good news is it held these lows back here at 36.50 or whatever. If you're long against that level, that's fine. But what you really want to see is a breakout above the downtrend line and a recapture of the old trading range at 41. So that might be a level to alarm if you've decided I'm not going to really get involved down here. I'm going to make price prove it first. I will, if price can come up and take out 41, then I will play for a $5 move up towards 46 at the top of the range. And very much like the other ones, ARC-W didn't really do anything yesterday. Really, the only thing of significance is right at the lows of the trading range here at 46, 46.16, right in here. So if there's going to be a rally, you can be long against 46 right here. I thought it was interesting that all told, the ARC complex did not really participate to any kind of degree in yesterday's rally, and that may be a function of gravitating to quality, where we saw the Apples and the Microsofts and the Amazons and the Google, all the FATMAAN names that remain on our focus list got the majority of the price action. So maybe the beta on ARC is not coming to fruition on this particular upcycle in price action. So let's recap it. NIMO, our oscillators, NIMO and NAMO are coming out of oversold conditions, racing higher on this bounce. We've got some good follow-up pre-market action on yesterday's rally. We've got a number of stocks that are either breaking out of their downtrend channel or at significant points in that, whether it be the midpoint or the upper end of the range. Watch today on places where you can make an objective entry on the long side on a breakout of either a trading range or that hourly downtrend midpoint or upper end of the channel. And let's see if we can get 3-4 day rally. And by all means, keep the VIX and TLT front and center. You want to see TLT either flat or rising, indicating that rates have stabilized or are falling. And then, of course, you want to get that VIX back under 29, and that would really bode well for the rally extending. So let's wrap it up there. If you're new to the channel, thanks for spending some time with me. If you'd like a pre-market look each and every day with some objective levels to trade against, please hit the subscribe button, the alarm bell, and you'll get it. You'll be notified of that YouTube content. And then also over in the show notes, find the link where you can join our team by simply dropping in your email, and then whenever I send out an idea, an observation, market commentary, whatever, you'll get it right in your inbox. That would be great to have you. And then you'll also get an invite to our trading room, where you'll be joined by a number of aspiring traders that are working hard, helping each other during the day. And even if you can't participate during regular market hours, you can jump in after your work day and see if there were any observations, trade ideas that you want to participate in the future. That would be great, and a lot of people do that. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a great day of trading. Stay objective. Respect your stops. And I think you'll have a great day of trading. I will talk to you next time.